We all want to find the perfect investment, right? The one that will allow us to sleep at night, the one that is not too volatile, and most importantly, the one that has high return. And when many people talk about the stock market, cryptocurrency, or startups that provide double-digit growth, I was surprised to learn that it is none of that. It was discovered 160 years ago and is still relevant today and essential in our day-to-day life all around the world. I'm talking about oil. And let's see why. Hi, Jared here, and today let's talk about investment. So, let's start with a brief history of oil, then why it is a great idea in the coming years, the myth around it, and finally, how to invest in it. Everything was going well for oil, until one day, politics, media and others started to think about alternatives, saying oil will one day kill our planet, which divided the world into two. Oil and gas energy, the foundation of our modern world, and renewable energy, the future of our world for generations to come. Here is the catch. We need both to run the world of today and tomorrow. Cohabitation is key. Unfortunately, renewable energies are intermittent and have limited and expensive storage capabilities. These two issues made the UK suffer recently because wind power is too much volatile. So, for years to come, oil and gas are essential, if not vital, for humans. So far, 2022 has been a wild year for oil investments. Circumstances brought a perfect storm of increasing prices and demands, which is the exact opposite of what we experienced in 2020. The COVID-19 pandemic initially destroyed demand, tanking oil investments, with Saudi Arabia and Russia getting into a price war to see who could go the lowest. When in fact, oil meets 97% of the UK transport sector demand. In addition, it also benefits our lives by being vital to the production of many everyday essentials. Oil's refined products are used to manufacture almost all chemical products such as plastic, fertilizers, detergents, paints and even medicines, plus a whole host of other products that you might not even expect. And this is what we owe to oil, for instance. At school, rulers, crayons, ink and cartridges. In the home, contact lenses, cosmetics, clothing, fabrics, nail polish for instance, but also computer hardwares, phones and so on. Through its extensive supply chain, the oil and gas industry employs hundreds and thousands of people and makes a major contribution to the US economy in terms of tax revenues, technologies and exports. So let me say it again. Tens of thousands of people work in the oil and gas industry. So, is oil and gas a good investment right now? Well, with prices on the rise, many are tempted to try and profit from the ongoing market frenzy. Investing in oil was highly profitable for many who took advantage of the low prices in 2020 and even 2021 again. However, trying to invest in oil and gas at current prices could leave you with little to gain, and possibly much to lose once gas and oil prices even out. Before further determining if oil and gas is a good investment right now, let's take a look at 4 common myths when it comes to investing in oil. So, myth number 1. Low quantity of oil and gas. The Limits to Growth was published in 1972, an alarming pessimistic report based on MIT computer simulations of economic and population growth, and resources perceived to be in short supply. Again, in short supply. The model predicted that all known petroleum reserves would be entirely used by the end of this century at the same consumption level. So, if consumption rates continued to increase, gas and petroleum would be gone by 1982. What actually happened is that the US got better at finding and extracting oil and gas. This is due to improved technology and new discoveries. In the United States alone, companies now produce more oil than during the previously accepted peak oil production era of 1970. Myth number 2. Alternative energy is a better opportunity. Well, the truth is that energy demand around the world are steadily growing, and this demand is being met by both alternative energy growth as well as oil and gas. Energy expert Alex Epstein argues in his book Fossil Future, more oil, gas and natural coal are needed to sustain human flourishing, not less. Myth number 3. Falling demand for oil and gas And well, while energy sources are diversifying all around the world and in the US, the demand for oil and gas has not decreased yet. Oil consumption continues to rise, especially in countries such as China, India, and in the US. As the chart shows, demand for crude oil has steadily increased since 2006. In spite of the rise of electric vehicles, the demand for all kinds of energy has only risen due to the population growth and higher quality of life all around the world. And even as more people buy electric vehicles, we will always have a demand for oil due to plastics which are made from petroleum, trucks, and heavy equipment that require diesel. Myth number 4. Saudi Arabia as the largest oil producer. As of 2022, the US has become the world's largest producer of oil, in part due to extraction from shale oil deposits, and the US is followed by Saudi Arabia, Russia, Canada, and China. So, how to invest in oil and gas? Essentially, there are several ways to invest in oil and gas. Let's take a look at 2 options available, along with pros and cons of making investments in oil and gas. One simple way for the average person to invest his oil is through stocks of oil drilling and services company. In addition, investors can gain indirect exposures to oil through the purchase of energy sector ETFs. As with other industries, larger companies tend to be less risky. So-called oil supermajors, ExxonMobil, Royal Dutch Shell, BP, Chevron, and Total Energies, each with global operations and annual revenues of more than $100 billion, aren't going bankrupt anytime soon. And I would personally choose Chevron over others because of better money management, lower stock volatility, and higher net income. And in terms of ETFs, we have the iShares Global Energy ETF, which provides exposure to the largest energy companies globally. Exxon and Chevron accounted for about 26% of the $2 billion funds portfolio in March 2022, followed among top holdings by Shell, ConocoPhillips, Total Energies, BP, and Enbridge. Investing in oil markets means investing in yesterday, today, and tomorrow, from indirect exposure via ETFs or direct exposure via stocks, for instance. So, the energy sector has something for almost everyone, and as always, with all investments, you should always do your own research. So, what do you think about the situation? What are the alternatives to oil? And can renewable energy replace oil today? Thank you so much for watching. Feel free to leave a comment down below, subscribe if you want to see more, and I will see you in the next one.